Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, guys, I'm here to make a big update on what is happening on SPY, QQQ, the global markets. We have the interest rate Fed decision coming next week. We had a bad day 2 days ago and yesterday as well. So let's see what can happen next. Let's get into it. Alright guys, so like I said, I'm going to go through SPY, QQQ, quickly going to have a look at the US 10-year yield, which is giving us information about inflation. I'm going to give you my view as usual, different scenarios, and I'm going to discuss as well how the Ukraine-Russia war is impacting what can happen next week regarding the Fed decision about the rates. So, first, SPY, daily time frame, here we are guys. You know this drawings, guys, this chart. I've been doing that for 2-3 months here on YouTube, on my Discord, of course. I'm talking every day or every 2 days about that. So here we are, the breakout, guys. I was there to tell you that we are breaking out and that we go lower. And I told you as well that we would probably have an ABC because corrections often happen in 3 waves, ABC, okay? So, A, complete. B, was full of bull traps. We avoided them. And now we're in the C wave. So the question we're having is the C wave complete? Can we go lower? If yes, where? And what level do we need to trade above so that bulls take back control, if any? So let's answer all these questions. First, C waves usually develop in 5 waves, just like A waves. 1, 2, 3, 4, 5. B waves develop in 3 waves, A, B, C. And C waves, 5 waves, 1, 2, 3, 4, 5, right? Not always, of course, but most of the time it's the way things happen because those A and C waves are the ones that are in the direction of the trend, which is bearish in an ABC corrections. And whenever you're in the direction of the trend, usually, you know, you have some extension. That's why you usually have 5 waves, not only 3. So here we can count the waves. It's not perfect science. Of course, guys, this is ELLIOTT wave theory, but it's helping a lot. So 1, 2, okay, no doubt about those 2. 3, no doubt. 4, no doubt. And we are in the 5th, all right? So it's not working all the time. But if it is the case here, it means we need to make a new low. So to me, this 5th wave is not complete. So I know that the pre-market right now, I'm doing this video at 3 hours before the pre-market. US S&P futures are trading 2% higher. So we are going to open around here, all right? So around 425, okay. I think we're going to get sold at the open if we open here because we are bearish, guys. We have some information like this big volume. Okay, those 2 red days, guys, are not looking like the end of a wave that is usually happening on lower volume. Now here the low volume was in the B wave, so everything looks big here. I don't have here many examples, but at the end of a wave, usually you have low volumes. I mean, not increasing volume. So whenever the volume is increasing, it's rather looking like we're in the middle of something. So here I think we're in the middle of the 5th wave of the C wave. So let's see if this is happening. If we get sold today, 415 is still support, but it has been tested yesterday. It hold. If it's tested again today, I don't think it might hold. This time it can break. And if it breaks, we would go to 407. All right. Why 407? Because it's a support level that is coming from here. It's not perfect. I would rather put it. I try to match as many levels. Like here I have 3 candles consolidation. Here I have a 1, here 1. So maybe 405, something like that. It's of course an area. It's not very precise. So yeah, this is my preferred scenario. Once again, because of the volume, because of ELLIOTT wave theory that is telling me that the C wave doesn't look complete. And yeah, that's pretty much it. Now let's check the alternative scenario. It's not, I don't have a strong confidence index for this scenario. It says 60-40 for the bearish case, but we still have 40% chance that the C wave is complete and that it was a truncated C wave, which happens, of course. In this case, if we open here and we manage to close above 427, okay, which is the clear resistance that we're having right now, okay, why? Because we have same thing as 1, 2, 3, 4, 5, 6 recent reactions, and look in the past 4 like older reactions. So this was a clear support. It is now a clear resistance. So my take is that we go there today and we get rejected, but let's see. If we close above that, it would be a first good sign that things are going better, okay? Because it would be a clear victory of bulls, especially if it's happening on increasing green volume, all right? If you have a green day with increasing volume, this would be a very good sign. So let's hope for that, but let's be prepared for everything. Then if we manage to close here, it's not over, guys, okay? It's not going to be over until we at least break out from this pattern, all right? Because as you can see, guys, here we have some good signs. Let's be honest. We have a bullish, regular bullish divergence. Okay, so I'm not going to explain exactly what it is, but it's just, you can see the momentum is making higher lows. So the momentum is going up when the price action is going lower, which means that bears are out of steam. They're not able to push the momentum lower. So it's a bullish configuration, but as long as you don't have a breakout outside of the pattern where you have this divergence. So here the divergence is coming from this two lows. So you just check what is the trend line that is looking the closer to this pattern, and it's definitely this one. It's not a perfect trend line. I have 1, 2, 3, and not even 4 reactions. So this trend line is not perfect. Maybe I should do it like that. I'm not sure. I have some noise here, but we are far from it. Okay, so first we would need to break out above that level. Okay, so around 435. So first we need to close above 427, then 435. And we could still have a fake out here because once again, this trend line is not clear. So to me, to be really looking bullish, we need to close above the 200-day moving average and this trend line that is the real resistance that we're having right now, because we have some same thing as just some recent reactions, a high here, 2 recent lows here, consolidation here, and the 200-day moving average just above that level. So this level makes a lot of sense to me. I could make it slightly higher. So let's say 445. So we are far from that, but I'm just giving you the scenario for the coming week. Maybe I'm not going to do any update this week. Of course, on Discord, I can make whatever you ask me to do, guys. But here, I'm giving you a weekly scenario. So if we close next week above this level, it would, of course, be very, very bullish. This would be probably the guarantee that bulls won the battle. Would probably take some time afterwards, but every dip here would be a very good buying opportunity. Okay, so this is what I'm seeing, guys, on this market. Now let me quickly discuss what is happening. So next week we have, so first tomorrow, what do we have? We have the inflation. So very important. The inflation is going to impact the 10-year yield. All right, guys, because it's a long-term yield. So whenever you have inflation, the US 10-year yield is going higher, and it can work as well the other way around. Sometimes it's like a leading indicator. So if you see this going higher, it means that traders are betting on inflation, and usually, they're right. If everybody's betting that inflation is here, it's because, they have enough data to think so. And if inflation is here, you guys know that we need to increase the rates faster, which is not good for the market. So I'm monitoring this. This is a typical breakout situation, guys. We have a trend line since October 2018. 1, 2. This was a little bit messy, but many reactions here. Breakout, usually, as usual, guys, I'm explaining that in my course. By the way, you get rejected on the first recent high. Then we usually pull back. So we didn't pull back very deep here, but we had some support, as you can see, created by those 2 highs. So we went to the support, so the pullback is validated to me. And usually then we move higher, all right, guys? And if we do that, it would not be looking good for the market, because it means that we would need to increase the rates faster. Now, let me quickly explain the situation between the war between Russia and Ukraine is actually creating a double effect. So we're going to have the Fed rate decision coming next week. And last week, Jerome Powell, in his testimony, said that there is a double impact of this war. First, we can see that very clearly there is the commodity prices going higher, which is creating inflation, which means that we should increase the rates quicker, faster. But in the same time, this war is impacting the growth, the global growth, because of course a war is not good for business. So if it's impacting the growth more than it is impacting inflation, we would need to keep the rates lower than expected. All right. So the truth is that it's a very difficult decision to take. I think it's hard to predict from now what the Fed is going to say next week. I don't have a view on that. I think that the inflation issue is maybe something that we need to handle. So I don't think they're going to slow the pace. But I mean, I don't want to say too much about that. I don't know, let's be honest. So let's see what they're going to say. But this decision will be very important for the market. And once again, if they think that it's not going to impact the growth that much and that the inflation is here, then they're going to maybe raise. I mean, the inflation is going to be here even more, because this is what is happening. You guys can see the oil is at 125 right now. Crude oil, the copper is higher, the wheat is higher, gold is higher. I mean, everything is more expensive, so we're going to feel this on the price of everything sooner or later. So I think that we're not going to have very good news coming from that, to be honest. But that's not a strong view. I prefer to wait and see. But this is going to be very important. It's going to happen here, guys, on the 16th of March. Fed rate decision, 16th of March. And then the Fed press conference is going to be very important as well, guys. So we have a lot of data coming, guys, very soon. I mean, tomorrow and this week. So it's gonna be very important to see how the market reacts to that. Okay, now let me give you my levels on QQQ. I'm not going to do the same analysis. It's the same thing, guys, increasing volume. As you can see on the red day, we didn't complete the fifth wave of the C wave. The level is here, 307. So I think we might go there, guys. And the 427 level that is here, that is the first level we need to trade above, is at 340. So 340, we're probably going to get rejected. If we are not rejected, we might go to 350, push higher, then get rejected. And if we go above 350, it would probably looking good to 370. And 370 is the level we really need to trade above for at least 1 week to be bullish again. So guys, we're far from that for now. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.